Anthony Grasso here, bringing you financial news you can use. In this video, I'm doing a stock analysis on NFLX Stock. Can this company continue to outperform its competitors and keep skyrocketing to the moon in the years to come? Well, let's find out together. I'm going to go over a summary of the company, its product offerings, recent headline news, financials, analyst projections, and give it my buy, hold, or sell recommendation for both your short-term and long-term growth investors. And as always, folks, don't forget to smash that like button down below and consider subscribing and hit that notification bell if you'd like to hear daily stock reviews and recommendations from an unbiased source. So let's get right into it. So Netflix is a provider of subscription streaming entertainment service. The company has paid streaming memberships in over 190 countries and allows members to watch a variety of television series, documentaries, and feature films across a wide variety of genres and languages. Members can watch as much as they want, anytime, anywhere, on any internet-connected device. Now, members can play, pause, and resume watching without commercials. It offers a variety of streaming membership plans, the price of which varies by country and the features of the plan. Pricing on the plans range from anywhere from $3 to $23 per month. Now, members can watch content on Netflix through any internet-connected device that offers the Netflix application, including most smart TVs out there have it right on their smart TV. Game consoles, streaming media players, set-top boxes, smartphones, and tablets. Now, the company acquires licenses and produces content, including original programming as well. I've definitely been watching a lot of those Amazon series out there. I love them. So let's look at some of the news of the company right now. Now, Netflix shares have seen its biggest jump in the past 4 years recently. The streaming giant revealed in its quarterly 2020 earnings report last month that it was considering stock buybacks and had surpassed 200 million subscribers for the first time. But I doubt any discussion of stock buybacks is on the table right now, and I will get into that later. Now, let's go ahead and look at some of the fundamentals of the company right now. The company currently has a market capitalization of around $249 billion, with the current stock price trading at around $557 a share. Now, earnings have grown 51.9% per year over the past 5 years. And the 2020 revenue was $24.99 billion with $2.76 billion in positive earnings. The earnings are forecasted to grow by 24.99% per year. And by 2025, revenues are projected to be $45.6 billion with a positive $10 billion in earnings. I feel that Netflix trading right now is at about 9% below my estimate of fair value for this company, for the book value. I put a fair value around $619 a share right now. So let me bring it back here. So what do the analysts say about this one? Well, the analyst consensus is currently a buy, and their average target sales price, stock price right now is $619 a share, with a high estimate of $840 and a low estimate of $270. It's currently trading way below the median price target right now at $557 a share. Now, going over a few of the analyst reports, New Construction Report has Netflix as a neutral rating and says they do not recommend investors to buy Netflix right now. And they said that their neutral rating means the stock's upside potential is about equal to its downside risk. Now, the CFRA report has it as a buy rating with a 12-month price target of $650 a share. They have it as a high risk, though, because their risk assessment reflects intensifying competition among established and new entrants in the subscriptions video on demand landscape, potential threats from direct-to-consumer offerings by the major content providers, corporate governance concerns relating to the classified board of directors, and some regulatory uncertainties related to the FCC's recent overturn of the net neutrality regulations. Now, the CFRA buy opinion partly reflects what we view as further upside on global subscriber growth, with an expected acceleration across various international markets. After significantly better than expected Q4 2020 subscriber additions to wrap up the record year, Netflix notably been a prime beneficiary of increased streaming during the COVID-19 lockdown. While the outlook for 2021 could reflect some residual near-term impact of demand pull forward during the prior year, Netflix seems to be on the cusp of sustainable positive free cash flow with a break-even target in 2021 that should mark a key milestone, and I'm definitely going to get into that in a few minutes. Now, risks to their opinion and target price include uncertainties with the potential impact of prolonged COVID-19 pandemic on content development, intensifying competition in the United States and global streaming landscape, and there's potential exposure to net neutrality or other regulatory factors, and capital structure constraints on relatively high leverage. Their 12-month target price is $650, and on a price to sales of 9.7 times of our 2021 estimate. A very steep premium to consumer-facing internet peers and well above its recent historical averages, partly warranted by a relatively attractive international growth profile. Now, the street ratings is also a buy recommendation, and they have a price target a lot higher than that of $724 a share over the next 12 months. That is driven by a number of its strengths, which they believe should have a greater impact than any of their weaknesses, and should give investors a better performance opportunity than most stocks that they cover. The company's strengths can be seen in multiple areas, such as the robust revenue growth, notable return on equity, expanding profit margins, good cash flow from operations, and solid stock price performance. They feel that its strengths outweigh the fact that the company has had generally high debt management risk by most measures that they evaluated. So my buy, hold, or sell recommendation on Netflix stocks, here are my thoughts. Now, I think the company right now is firing on all cylinders at this exact moment. We do know that the company benefited from coronavirus-induced lockdowns as people were forced to stay in their homes and find ways to entertain themselves. Now, fourth quarter 2020 financials results beat the Wall Street estimates for both revenue and subscriber additions by crazy. Now, let's examine comments regarding Netflix's impeding financial position. So let's go ahead and bring up the quarterly 4 report real quick. He said in the 5-year period from 2015 to 2019, Netflix total free cash flow was negative about $10.9 billion. This, folks, is about to turn around very quickly. For 2021, Netflix management expects the company break even in terms of free cash flow. Now, the company is on track to being sustainably generating excess cash starting in about 2022. Now, if you took Netflix's 204 million paid subscribers to turn out its cash flow, I can only imagine Netflix's competitors will be losing gobs of money before they reach Netflix's massive scale. We no longer have a need to raise external financing for our day-to-day operations, management mentioned in the fourth quarter shareholder letter. Netflix has 16 different debt obligations currently outstanding, with a total principal amount of $16.4 billion. So it's great news for investors that the plan is this number to stop increasing. So for long-term growth investors out there, I'm gonna bring it back there. I am a long-term bull on Netflix right now, with a target price of around $650 to $675 a share over the next 12 months. But I definitely want to talk about something on a different note, because we know what's going on with AMC. How many of you folks out there would think that Netflix would be a great candidate to buy AMC either in 2021 or 2022? Let's examine a few ways Netflix could leverage AMC. In the midst of this pandemic, there's no doubt that we live in a world that it seems to be people that want to have everything streamed in their homes, including new film movies that come out in theaters. Now, one idea is Netflix could operate AMC, and a number of new releases would go to the theaters first, and then a month or two later, it'll be on Netflix. Because I don't know about you, but I love going to the movies, and that would actually be a good merger. There's also talks about possibly Amazon buying AMC, but now I just want to be very clear. This is pure speculation, but please comment down below on your thoughts either on whether Amazon or Netflix would be able to buy out AMC in the future, or if they would want to. So there you have it, folks, and as always, don't forget to smash that like button down below and consider subscribing and hit that notification bell if you like to hear daily stock reviews and recommendations from an unbiased source. Until the next stock update video later today, folks, ciao.